Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Fabi Lara. She is the founder and publisher of The Next Big Rush, and we will put a link to her website and to her YouTube channel down below this interview so you can follow along with Fabi's work and analysis and company interviews. And Fabi, it's always great having you on the show and chatting with you just to pick your brain on how you're looking at different sectors. I know one of the sweet spots and the commodities you really focus on is uranium. And I'd love to have a chat about uranium because when I'm talking with other people lately, they're all bummed out, Fabi. We had this amazing
Mhm.
run for a couple of years, actually. And then even recently, just a couple months ago, things were still looking pretty good coming into this year. But 2024 has been more of a corrective year or consolidation year in the space. And so I'd like to just get your sense just to kick things off with the sentiment when you talk to other investors. Where do you think we are in the uranium space right now as far as investor interest and even the company sentiment?
Right. So I can tell you right now, we are not in a mania phase. I think everybody can agree on that. And from that, then we can move into, the why things aren't moving in the way that we speculators expect them to move. Well, of course, the moment I buy a stock, I want it to move up and never correct back down and just, ride it out, 10 bagger, beautiful. Turns out that real life doesn't usually work like that. Even when you do get a 10 bagger or more, which has happened with me, thankfully, in the uranium market, it usually comes with a lot of drawdowns. It usually comes with ups and downs and lots of uncertainties regarding not just, that one particular stock, but sometimes the whole market. And so I'd like to draw people's attention to what is happening right now in the fundamental thesis of uranium. And that is that every single month, if not every single month, and at least every single quarter, the story gets stronger. Even I want to say a quarter or two ago, people were not talking about using nuclear for AI energy generation. We're looking at all these data centers that already exist and that are being built currently that will need a ridiculous amount of energy. Don't quote me on this, but I read somewhere that the average Google search is going or something similar within AI takes about 10 times as much energy as the average Google search. And so if we understand where AI is going and just the fact that it's not going to go anywhere, it's only going to grow and become more and more useful, then we can sort of add that to a story that was already really, really strong and did not need anything extra. So there is that. The fundamental thesis is untouched and actually getting better. That is one thing, which means that naturally you'd expect a commodity to move up in price. That's great. That's awesome. And then we have to decide, okay, how do we even measure the commodity going up? And that is two ways. One is the long-term pricing and the short term, which we call the spot market. And the spot market has been the most boring thing I've ever seen. I've been out of action. I have not traded anything or bought anything in several weeks now for personal reasons, bringing a little human into the world during that time. But I didn't miss anything because it's basically gone sideways for several weeks now. And we have to understand what is that market? Who is buying and selling into that market? And that's usually utilities and others topping up from their long-term contracts. So that's really boring. And then you have to ask yourself, is there any sort of seasonality to that? Does it get hotter at a certain time of the year? Does it get colder at a certain time of the month? And those are also true, right? There is a certain type of seasonality that occurs in this market. But then you look at the long-term market and the price is going up. It keeps going up. It keeps ticking up, not wildly like we're used to in the mining space. So the commodity is doing really well. The commodity is more rare today than it was in previous years because extracting it is more complicated, more cumbersome, and more expensive. And then you have to look at your own stocks to see if they match that. Most of the time, they don't unless people are really, 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 really into the commodity. But that doesn't usually happen at the beginning of a cycle, and it doesn't usually happen in the middle of a cycle either. It's towards the end of the cycle where we have the mania phase, and when that does come, it is absolutely explosive. And so what we have is investors and speculators confusing the fundamental thesis of uranium versus the fundamental thesis of uranium stocks. And they should match in the perfect world. In the real world, they don't match exactly because you need people to be interested in the stock, which means you need to have lots of speculative money and lots of volume. In the Canadian markets, we have not had lots of volume in a long time. Call your broker right now, ask him about volume in the last 12 months. They're going to cry if they're honest with you regarding volume. And that really, really affects the stocks, both in the short to medium term. So yeah, people need to adjust their expectation to that. But that doesn't mean that the mania isn't going to come. I'm still holding on for that mania phase. I think that what has happened in the recent past and 2020, 2021, those were really good years for most uranium stocks. That tide will come back, and I do believe it's going to lift all boats, especially the tiny little companies that most people don't really hear about.
Yeah, I think that's a great lead in and summary of the situation on both the fundamental side and how to approach looking at the stocks. And I want to get into the stocks, but before we do that, I wanted to circle back to something you talked about on the fundamental side first, and that is when you look at what's happening as a general trend in the industry, we keep hearing things that, well, maybe uranium has peaked out. Well, maybe that was it. Well, maybe getting to $100 was getting over its skis and that was just too far, and maybe that's it. But then you look at the other side of the equation, all the reactors that are being built, not just in China, but in the Middle East, in South America. There's all kinds of reactors coming online that people didn't even think were going to make it. There's also life extension to reactors where they're going to stay for another decade or two that people didn't think was going to happen. And there's a general sentiment shift with countries as far as how they look at nuclear power and understanding it's got to be a part of the mix. So maybe make sense of that conundrum of how does an investor looking at the space make sense of it all when it looks like there's all this growth, but then you hear narratives that, oh, well, maybe that was it. Maybe uranium's done and it's not going to go any higher. How do you make sense of that part of the market?
That's a good question. I think it goes back to what I mentioned previously, differentiating between the commodity itself and the miners, because they don't move exactly in tandem. So what's going to happen is, even if you read up on the thesis and you really believe in it, people like myself, we run towards the miners because it's what we love. We love the speculation of it, etc. And I think that for people who don't have a super strong case, or they're not as involved as, some of us, I guess, are in the space, reading news about it most days and getting educated constantly, I think that people need to go back and say, okay, if I believe in this thesis, let's buy the actual commodity first. And let's just dip our toes in. And let's see how this does. And let's keep up with the news and let's see if that makes sense. Get in small. And then maybe get into an ETF where you don't have to track each individual company as well, because that gets really convoluted. I mean, we're talking here jurisdictional risk, we're talking about permitting risk, we're talking about M&A, and a lot of other things get really complicated in a commodity that's already plenty complicated, trust me. So I think that the way that people should go about it would be to simplify. Don't try to pick all the stocks if you're not willing to spend time understanding the different stocks, and most importantly, the risk, not just the risk in the actual company you're buying, but the risk in the thesis. I usually get very unsettled when I don't know what could bring a story down, whether that's a stock or, it's a story of a commodity and a thesis. And for a long time, I think I didn't understand any bear case against uranium. And for the most part, I still don't. I think it's very, very bullish, especially, in the medium term. But the truth is, let me present a bear case for uranium so that people can shake their heads a little bit and disagree with me. That's fine. It doesn't really matter if you buy a uranium stock, okay, and the uranium stock that you're buying grows in market cap and it doesn't grow in price. That can happen if the thesis takes too long to play out, because, junior miners are diluters. That's how they survive. And so what you have to look at is, when is the stock that you're buying now going to go up in price? And what are the catalysts for it today or in the next 3, 6, 12 months, etc.? so that you can maybe take some profits off the table. Yes, I do personally have a long-term view and I'm willing and able to put some money into these stocks and wait it out. But I think that most people realistically don't have that much patience. And so even if a story gets better and better and better, is the price actually going up as much as it should? And sometimes it's not because the management team has to or has chosen to raise the money in order to try to add value to the company or maybe fill their pockets. I don't know. It depends on the company wildly. So, yeah, watch out for that because sometimes a positive thesis for the commodity is actually a bear case for stocks. And some exploration plays at companies aren't going to find any uranium throughout the whole cycle. In fact, I think most of them won't find anything that is truly worth going after. If you try to figure out the numbers behind it, then you're going to see that a lot of them simply don't make sense. So you have to be careful with that. And you have to understand that there is such a thing as supply and demand for the stock that you're buying. So if nobody else wants your stock, nobody knows about it, you don't talk about it, nobody talks about it, nobody knows it exists, then it kind of doesn't matter. And you're safer buying an ETF.
Yeah, such a great point. And I think a lot of investors conflate investing with a commodity the same thing as in buying that stock that may be tied to that commodity. And it's not just a uranium thing. Just because you have a gold in the name of a stock doesn't mean that they have any gold in the ground yet if they're an exploration play. Just because there's silver in the name, A, doesn't even mean they're a silver company. It doesn't mean they have any silver in the ground yet if they're an exploration play. Or even if they're a developer, they may not have an economic deposit. So in the world of uranium, same kind of thing. Uranium can be spiking to new highs in price. That doesn't mean the stock that you're investing in is tied to that price because it has its own micro fundamentals. It has its own value drivers. And like you say, there's supply and demand of that stock. So let's talk about the stocks. I want to kind of break it into two chunks. One group are the producers or near-term producers, and the other ones are the earlier stage exploration plays looking for the next deposits. Let's start with the producers and near-term producers. Any thoughts on how you play that side of the market?
So I think if anybody has owned the producers in the last couple of years, they've done really, really well. A lot of people have already tapped out and, got what they wanted out of it. I think that if we expect a mania phase and a full bubble out of the uranium market, which I believe can still happen, and it's very likely to happen with such a small market and such a necessary commodity that does not have any sort of alternatives for it whatsoever, then I think what we should do is look at it as a whole and then just ask ourselves, okay, what is the first step? Usually it's big money. Big money usually comes to the only thing that they can buy, which is the producers. It needs to be several billions worth of market cap. So there's that. And so those move first. If somebody is, like I said, new to this market, you can just go straight to the ETFs. That's fine. But if you want to also play it safe, you can get, into chemical, maybe a little bit of Kazatomprom. There might be a bit of jurisdictional risk with Kazatomprom, but they're also the largest, cheapest producers. So do not forget about them. And then you can take a look at the late stage developers. You have Global Atomic, which is very risky right now because it's in Niger and that's undergoing a coup of sorts still. But you have great development plays, such as Denison, for instance. And if you look at Denison, sometimes when you're new to a thesis, it is worth it to actually just get on a call with somebody that has been investing in this for a while and just ask them questions, right? Or, just post questions on Twitter. Because, for example, anybody that's invested in Denison right now with any sort of decent amount can tell you why they're invested in it and why Denison's management team is such high quality, why, they were able to lower their capex so much. If you look into their buys and sells of their uranium material, you're going to understand very quickly what they've done there. And so having some exposure to, the different stages of development, it's the way that the sizes of companies and stages of development from exploration to development to production is kind of the opposite of money flow. So money flows first into producers and then developers and then exploration plays, typically, not always, but typically. And so knowing that, you could actually write it out by first buying the producers and then developers and then exploration plays. I don't try to do that. What I try to do is because I know that there are catalysts with individual companies that are far along in that spectrum. I try to get just a mix, a mix of different development stages and a mix of jurisdiction, which is very important. I know everybody knows that I talk about the US as a jurisdiction a lot and I absolutely love it. But, what if something happens with the US as a whole jurisdiction and it brings that whole industry down? That could happen. So you need to be diversified, I think, if you want to protect yourself, because as I say, anything that can go wrong in mining will go wrong in mining.
Well, you gave me a lot of different strings to pull on there, Fabi. I got a couple of different directions I'd like to go, but let me just follow up on the Denison comment first, because this is an interesting company, and we've talked about it on the show before in the sense that their Wheeler River project, they've got this Phoenix deposit that they've got to a economic study where they're going to be injecting fluids into the sandstone and doing what's called ISR mining, in situ mining. It's never been tried before in the Athabasca Basin, so a lot of people bash on Denison and say, hey, I'll believe it when I see it. But they have done some pilot tests on it, and they have, tested the waters with it a little bit, and it had good recovery rates. As far as people looking at that, everybody talks about the Athabasca Basin in Saskatchewan, and they keep talking about NextGen, and they talk about other companies. Fission just got bought out by Paladin, but the reality is the first one that's more likely to get into production as far as a new company is Denison. Let's maybe start there. What's your thought on trying this new method in the Athabasca Basin that's been successful in other areas but never tried here yet?
I think it's great. I mean, in general, I think the mining industry as a whole has suffered from the lack of new technology that actually moves the needle. When you compare it to the oil business, it's a far cry. It's actually really sad that we haven't been able to advance, the industry as a whole with technology. Unfortunately, for a few different reasons, you could make the technical comment that it's just more complicated to get different minerals out of the ground rather than oil, et cetera, et cetera. But I think we have a lot to go and there's a lot that we can do better. With the team at Denison, I think what we see is a team that has been able to time the market well, to advance properties, to actually get good quality properties in a good jurisdiction and actually do the work that needs to be done. And so, yes, I agree with you. They have been testing the waters and have been going through, the pilot plants. And so far, I don't have, obviously, I'm not an engineer and I don't have, this expertise, but I don't have any reasons to tell you as to why this technology won't work in the Athabasca Basin precisely. It does work in different places around the world. It works a lot in the USA and in other places. I think ISR is the most common form of extraction with Kazatomprom in Kazakhstan. And so it goes back to a technical question. Now, we have to remember, I like to go into this because it's real life, and so it needs to be mentioned. In the mining business, you have two different sets of problems. One is an honesty and, I guess, fiduciary duty issue or type of problem. And the other one is just being competent at the job at hand. And so I think with Denison, they've proven so far that not only are they honest people and that they're not into scamming their shareholders and actually treating their money really well. Now the question is, are they technically able to tick that box? And if they can do that, I can't even imagine the gross profits of each pound of uranium that is going to come out of the ground with their projects, because it should bring the cost down quite a bit. And mining is expensive. It's not getting any cheaper. So I would not bet against a team that has been able to tick all of the other boxes and has yet to prove to the market that this can be done at a large scale, because at a small scale, they have already proven it. Teams like that in the mining business, if they've survived as long as Denison has, you just don't bet against them. It's possible that they might fail, but I just would not go against them. So I don't own Denison currently, but I think it's going to be a great hold. And like I said, a later stage developer and a large enough market cap that it will get money flow before the smaller guys.
Yeah, some great points. I guess I should disclose I am a shareholder of Denison, so I liked your thesis there, Fabi. It makes me feel better. And I would also point out they've been producers in other cycles. They've been around for decades. They produced in the US before they moved to Canada and moved their focus there. And they actually spun a lot of their African assets out into GoVX in the first place. But so the team used to also manage the Uranium Participation Fund before Sprott took it over and turned it into Sprott Physical Uranium Trust. So David Cates and the team there, top notch. And that's a great point. You brought up two good points here: the value of the team and also the jurisdictional risk and diversifying the jurisdictions. You brought up a great point about the US, so I want to circle back to the US real quick. There are about, maybe a half dozen companies going into production or currently in production in the US. What's your take on the US uranium market, and not just the producers, but maybe some of the companies also exploring in the US?
I love the whole thing. I love the fact that uranium in the US, well, US for uranium used to be, number one back in the, I want to say 60s and 70s. I don't know. I wasn't around at the time. So I'm just going from what I've read here. It's not from memory. But yeah, the USA used to be the largest producer in the world. And that means that for the decades that came before it, there was a lot of exploration and development work done. And so there are many deposits that are well known and areas that are very welcoming to uranium mining specifically. And on top of that, they have not undergone any sort of modern exploration methods, and that's happening. So there's sort of renaissance happening right now with the US. You have Encore Energy, which is producing now. You have Energy Fuels as well, that is turning on their production, UR Energy and also UEC. And so what's really interesting is that the question of whether the uranium is there doesn't exist. The question is, how much can you sell it for? Can you sell it at a profit? So it's a matter of, can you hire the best operators and can you market your product? And marketing the product, I think, is one of the biggest upsides that US projects have, because the US is that rich kid in class that just shows up in the best sneakers at all times. Like they always have the best stuff, right? And they have a blank check to decide whether they're going to push a whole industry forward and make that the leading industry. They can do that. They have both the means to do it financially and also the minds to do it if they want to, because they have the money. And so they already know where all the deposits are. Production has been turning on and will continue to turn on in the next couple of years, but it's still small. And so you can make money with these individual companies because they go from being a developer to a producer, which in the mining world is a massive achievement, by the way. But they are not producing enough that you look at the thesis and say, there's too much production coming online. This thesis is not going to pan out because there's going to be too much supply. So I just absolutely love it. And I'm hoping that there's going to be lots of consolidation in the region, companies that just come together and say, let's either merge or somebody will buy them out and put things together, because there are many deposits, but those deposits are usually small. And so I think you can get a lot of synergies by keeping them under, bigger companies that just get the job done.
Yeah, good point. And we just saw a really big deal, not in the US, but with Paladin coming in to take over Fission. But it'd be nice to see some more M&A in the space, because before that, there really hadn't been a lot recently. And in the US, there's definitely ample room to consolidate some of the development projects, maybe with some of the producers, or maybe some of the producers getting together and forming a larger company. So that will be interesting to watch. But we can't really talk uranium if we don't pivot up to the Athabasca Basin, Fabi, and we need to look at the exploration side of the business. So let's dive in, because most of the exploration money being spent, while there is some in Africa, while there is some in Australia, and while there is some in the US, the lion's share of the uranium market is really in Canada, in Saskatchewan, and the Athabasca Basin. Let's talk explorers.
Explorers are really interesting because I'm just going to share a personal anecdote that really hurts me right now, but I think it's going to illustrate well how people should play it. So I do have a few different explorers in the Athabasca Basin, and I like to take an approach of picking a little bit of different explorers instead of going for one big explorer, unless they have already made the beginning of a discovery and you have the geological mind to assume that they're going to continue to find more of that mineral, whatever it is that they're looking for. So in the Athabasca Basin, it's very difficult to be middle of the road. You either hit really big or you don't hit at all. And you can just not hit at all for several years before you hit it really big, which happens a lot of the time. And so I think somebody looking at it, there's just so much opportunity to be the next discovery, but you just don't know which team is going to get to it first. So you have so many good names. You have Atha Energy, you have Stallion Uranium, you have Sky Harbor, and you have, COSA as well. They're just, I think Arrow is a newer one. There are many different teams working really hard, some really, really good teams. All of these teams that I've just mentioned are top notch. And, most people would agree with me on that, just on a historic basis, not my own personal opinion. But take, for example, what I didn't do and how that can affect people. So let's remember that if we're in mining, junior mining specifically, we have a thirst for risk and hopefully reward at some point, which means that FOMO is a real issue for most of us. And a story was brought to my attention. I actually spoke to the management team. I liked them. I saw them at a $5 million market cap. And this is not in the uranium space, but it's a different commodity altogether. And I thought these guys are onto something. Let me go buy some stock. Well, it turns out that, because I was very pregnant, I forgot to buy the stock and just left it for later. And then later never came. And these guys have just made a really nice high-grade discovery. And their stock price went up quite a bit in the last few days. And I have been just watching and slapping my forehead, thinking, let's not do that again. And so in order to avoid that, it doesn't hurt most people to hold a little bit of a few different exploration plays, because it kind of really hurts when you've picked the wrong horse for the race, but the race was really exciting.
I think that's a great point. Just because there is a uranium rush doesn't mean that the drill play that you're in or the exploration play looking to make a discovery is going to run with it. And that's true of all commodities. It doesn't matter if it's oil and gas or gold or uranium. You got to be in the horse that's running with the race. But there is no thrill like a discovery to really send a stock skyrocketing. But you mentioned peppering it around and maybe diversifying your risk amongst a basket of exploration plays. What else do you do to try to limit the risk that you're taking when you don't know if there's any minerals in the ground yet? You mentioned team, but is there anything else that you look at to minimize risk?
Yes, one of the things is to realize the timing of when you're getting into the stock. So you have to understand when they're drilling, whether it's going to be summer drilling or winter drilling. And when the management team tells you that they're only going to do winter drilling, then believe them, which means that if they're going to drill in the winter, then by spring they should have results, which means that most likely after that, there's going to be a lull and there's going to be very little reason for the stock to go anywhere. So ask yourself, when is the next catalyst going to likely happen? And then try to time your entries in those stocks so that you get the best out of them. Also, make sure that that's not a massive part of your portfolio. The quality of the projects here is one of the things that I wouldn't even try to go into very much. You can obviously look at a few companies and understand that they don't have much quality in their projects. And so, you could just remove them altogether. But when you're talking about, any of the companies that I've mentioned, for sure, you look at them and you're like, well, any of these companies could hit. But also, I'm not going to make my whole portfolio about the Athabasca Basin, because at the end of the day, that goes back to jurisdictional risk, not just exploration risk. But what if something happens in Saskatchewan? And even though you do hold something nice that gets a discovery, then how are you going to weather that storm? There's really nothing quite like an Athabasca Basin discovery because there's such high grade, but you could miss it for years, like I mentioned. And so if you just look at, for example, a company like F3, understand that it takes years to get to their overnight success. I asked the team, when did you get the first whiff of uranium that made you think that there was something to this project? And they told me it was 2014 that they first got a whiff of it, and they couldn't do anything with it because the market was so bad. And then they hit it just recently, and they've been, proving up that deposit. But it takes years. And if you don't get a really, really juicy entry price, then kind of, going back to the other point I made, doesn't matter when you came in. You came in maybe 10 years ago. If you came in at a bad price and the company has made a discovery, you might still be down.
Yeah, great point. And I think we'll wrap it up there because we could just keep talking for hours, Fabi. There's so
We
much that
could.
we want to get into, but I think you make a great point that it takes time. And to that exact same point, even with the hurricane discovery that the ISO Energy Company made, it was their seventh project. They struck
Hmm.
out on the first six before they finally hit and got lucky on lucky seven. And so these things take time, but when you're in them and they happen, they can be explosive gains. But I think we've covered a lot of ground here today about diversifying one's portfolio, not just in jurisdiction, but in the stage of company, having multiple irons in the fire, possibly having some exposure to the uranium price itself and the uranium exposure in the underlying commodity, and then diving into the information if people want to get more and follow along with Fabi's work. She does a great job of highlighting which company she's looking at. She interviews a lot of these companies, and she also takes some deep dives on her YouTube page. So definitely check out the website, The Next Big Rush, and her YouTube channel. And Fabi, looking forward to our next conversation.
Thank you so much, Chad. I look forward to it.